Hi and welcome back. So, do we need to analyze all the companies in the stock market to know how the stock market is performing? In today's video, we'll be learning that. So, in the last video, we have noticed that a lot of viewers have not commented down their attendance. Please do comment down your attendance and make sure you watch the video completely without skipping and maintain your notes. The 1 minute that you skip might have a lot of information that can change your whole trading career. And if you don't maintain your notes, you might forget something that we teach that might be a problem in your trading journey. So please make notes, attend the classes without skipping and comment down your attendance. So learn with Chart Talks and together we grow. The words Nifty and Sensex will be really familiar to you if you are already in the stock market or if you have a habit of reading the newspaper. But what exactly is Nifty and Sensex? Before going into that, we should know what a stock exchange is. So yesterday we discussed what stock market is and about the companies getting listed in the stock market, right? But these companies are actually listed inside a stock exchange in the stock market. Even though there are almost 30 stock exchanges in India, only 2 of them are nationalized. The National Stock Exchange and the Bombay Stock Exchange. Both of them are situated in Mumbai, and here as you can see, NSE, the National Stock Exchange, was established in 1992 and it lists almost 2,500 companies in it. And the Bombay Stock Exchange, the BSE, was established in 1875 and it has almost 5,000 companies listed in it. In the Instagram page, I had posted a fact about BSE a couple of days back and the caption was like, why do you think there are more companies listed in BSE than in NSE? So the answer is very simple. NSE was established in 1875. It has been there for a longer period. Thus, it has more companies listed in it. So now we'll come into the main topic of the day. That is the index. What is an index? Before knowing that, you should know how the stock market can represent the economy of a country. So, just imagine a country like that of ours, India, has lots of companies in it. What if all the companies inside the country is growing very well? Doesn't that mean the economy of that country is going up? Yes, it does. And vice versa. If the companies in a country are falling, that means the economy of that country is also falling. So how can we know if all the companies in the country are actually doing well or not? To know that, we would have to analyze all the 2,500, the 2,500 companies listed in the National Stock Exchange or the 5,000 companies listed in the Bombay Stock Exchange, right? But imagine if you have a value that can show you the overall market movement. Wouldn't that be great? That is exactly what an index does. How is the index calculated? The index is calculated by evaluating the top players, the top companies, the big blue chip companies in a stock exchange with the help of a formula called the free float market capitalization, which as an investor you don't have to know. And through that they come up with a value called index. So just by looking at that single value, you will know how good the companies in that exchange or that particular country is doing. So telling an example, an index in the stock market is just like an index in a book. In a book, the index shows you what all it contains, right? And you can assess if you want to buy it, if you want to read it, right? Just like that, seeing the index of any stock market of any country, you can make a decision to whether invest or not in that particular country or the companies listed in that stock market. So coming to Nifty and Sensex. Nifty and Sensex are the indices of National Stock Exchange and the Bombay Stock Exchange. Nifty, or more specifically Nifty 50, is the evaluation done on the top 50 companies in the National Stock Exchange, and Sensex has evaluated the top 30 companies in the Bombay Stock Exchange to come out with the index. Okay, so Nifty and Sensex is clear. You have the basic idea. But what is this Bank Nifty, Nifty Automobile, Nifty Pharma? These are commonly terms that your friends talk about who trade in the market. But what are those? You will not teach that. Don't worry. Those are sectoral indices. As you know, the stock market has companies listed from all the sectors in the country, right? There are companies in the automobile sector, there will be companies from the FMCG sector, pharmaceutical sector, there are companies from the renewable energy sector. So there are companies from multiple sectors in the stock market. So when picking a stock, you are choosing a stock in the automobile industry, okay? So you are picking a stock, company X, that you would like to invest in. Will the comparison with Nifty be the right thing to do? Because Nifty will have all sorts of company, right? Banking sector, the companies from banking sector, there will be companies from pharmaceutical sector, there will be companies from automobile sector, renewable energy sector. So just to choose a company from a particular sector, comparing it, the growth of that particular company in the past years with the growth of Nifty, will that be fair? No, right? So for that, each sector in the stock market has its own indices, and Bank Nifty is one of them. So now as you have learned what is a stock exchange, what is an index, what is Nifty, what is Sensex, and what are sectoral indices, now you should know the uses of these indices. An index generally has two uses. First one, as we had discussed, is to evaluate how the economy of that particular country is going. So when an index is going up, that means the country's economy is also going up. And if you see the index falling over a long period of time, that means the economy is also falling in that country. But what is the second use? Second use is to benchmark your portfolio. So what is benchmarking? Benchmarking is a way in which you can know if you have made a pretty good return on the stocks in your portfolio, that is your holdings. So these indices help you compare the growth or fall of your portfolio with the general market. So you have been holding a company ABC Limited, which we discussed yesterday. You have been holding 10 shares of that company, and that has given you a return of 10% in 1 year. Okay, 10% is a good CAGR, and you are happy with it. But what if you come to know the total country's economy, that is an index, the index in total has grown 25%. So doesn't that mean the stock you picked, even though it had given you good returns, that was not the best stock you could have picked, right? And vice versa. So if you have been holding ABC company and it grew like 10%, and the country generally, or like the index of that stock market have just grown like 5 to 6%, then that is great. You have outperformed the market. Your portfolio has outperformed the market. Exactly. This is the second use of an index. So that's all in today's video. We'll see tomorrow with a video where we learn how to open a Demat account, who all are the major brokers available and which one is the best, which one do I use, and how do you choose your broker. Till then, bye.